Bankers want RBI to help them cut the losses on their bond portfolios. This quarter, bond prices fell sharply after the RBI changed its monetary policy stance. Bankers have requested the RBI to allow them to shift their loss-making bonds from their available-for-sale portfolio to their held-to-maturity list. Lata Venkatesh is here with more.
Well, this is actually an action replay, and bankers first had made this demand in 2003 when bond prices fell very sharply. What the bankers really want is that there are three lists of bonds. There is a held to maturity list, which doesn't have to be marked to market, and then there is an available for sale list, and there is a held to trade list. The available for sale and held to trade list bonds are those which they trade and they make money. If the price of the bond at the end of the quarter is lower than the purchase price, that loss has to be marked to market. Now, last quarter, bankers made a lot of money because bond yields fell and bond prices rose, so they could write off a lot of their NPA losses in provisioning because of the gains they made on their bond book. This quarter, it is just the opposite. On the bonds that they hold on their available for sale and held to trade categories, bond prices have fallen, by a good 2 rupees, 2.5 rupees in several cases. So bankers are sitting on mark-to-market losses even in their bond book. Forget trying to, counter the losses in their, NPA provisioning. And therefore, the request to RBI that the request went on Friday, actually, that they be allowed to transfer the loss-making bonds at book value to their held-to-maturity category, which you don't have to mark to market. And there are some bonds in which they're sitting in gains in the HTM category. They want that swapped to the available for sale and the held-to-trade category, basically so that they will cut their losses at least. Now, will RBI agree? Well, the only hint we have is RBI has been making phone calls to several banks to ask them exactly what their losses are. So it looks like there is at least a sympathetic ear. We don't know whether the regulator will actually agree and on the terms in which the bankers are seeking.
All right, Lata, thank you so much.